Thank you for visiting the Coin Lady channel again. There isn't much happening, however Solana and Link do have some price action. However, aside from that peaceful day, the majority of things about flat up 1% down 2%, there isn't much to be enthusiastic about here. Since its inception, there has been a great deal of enthusiasm and fear of missing out, FOMO, surrounding Bitcoin exchange-traded funds, ETFs. Next week, when trading begins, I will be curious to see how much demand there is for these funds. Besides that, a lot of rebalancing is taking place. For example, some individuals were using Grayscale's product, which is significantly worse now that it's an ETF. A management fee of 1.5% is being charged. BlackRock, Fidelity Arc, and other exchange-traded funds, ETFs, are on their way. They are superior investing vehicles with far reduced fees. Consequently, I am certain that it will expand substantially in the long run after all of that fades away and we know how much demand there is and how much daily trading volume there is. The current situation is important to me, though. And it will begin to show up in the next 30 to 60 days. We'll see our starting point and be able to build from there. BlackRock CEO Larry Fink recently gave an excellent interview in which he outlined his goals for Bitcoin and the cryptocurrency market as a whole. Keep in mind that he has already stated his belief that Bitcoin and similar cryptocurrencies would not replace gold as a means of storing wealth, but he has now gone on the record as saying, "I do not see these emerging as actual currencies." So, what exactly is he selling? You can't just go out and buy currency units from him since he's holding investment hedges. As a result, this will naturally take up a lot of his time. The beauty of decentralized and open systems, though, is that you are free to put these resources to whichever use you see fit. Naturally, individuals do utilize these as a substitute for traditional money. No matter what Larry Fink says, they will keep doing that. You're right that an Ethereum ETF might happen. The question is how long it will take, though, considering the hostile attitude the present SEC administration has against cryptocurrency. This will, however, spread to the wider crypto sector in due course. Additionally, he correctly predicts that the increasing popularity of cryptocurrency will usher in a tokenized future. A large portion of assets will have their ownership stakes tokenized. The transactions will be recorded on a blockchain, making them more transparent and significantly reducing transaction fees. Most assets will trade in tokenized form going forward. It's simply the wave of the future. Final man, this article from the Wall Street Journal simply discusses Coinbase's achievements, and they have come out on top. There has been a flurry of 11 ETF registrations recently. 9 of these entrust their assets to Coinbase, while the other 2, BlackRock Arc and Coinbase, are among the most prominent. One exception to that rule is faithfulness, which entails taking care of oneself. Over the years, they have been heavily invested in cryptocurrency and have been constructing this infrastructure. Because of that, they are capable. In the United States, though, Coinbase is the place to go for a person-finding service. Despite their present legal issues with the SEC, they will likely continue to grow and extend their business internationally after paying the fine. Right now, they're attempting to push into Europe. Their success will be evident. However, at the moment, there is a hugely successful Coinbase industry in the US. In passing, I wanted to bring this up soon. I am missing some information because I haven't blocked. Not that I require it. What the hey, Charles Gasbrain? I have no idea. I would understand if he's a lonely, depressed man if he's simply mentally ill. However, he pursued Jeremy Hogan after speaking with the incorrect tech. As usual, John Reed Stark was just very pessimistic about XRP and cryptocurrencies in general, and Jeremy was addressing him. As for Mr. Stark, he simply warned that the XRP community would show him some love. There's nothing wrong with that. He isn't calling for violence. He does not want anyone to bother John Reed Stark. Breno gasps in surprise as John Charles steps in, commenting on how intriguing it is that this grown-up is supporting cyberbullying. After all this time we've spent together, Jeremy would never advise us to go out and annoy strangers, and Charles is the one who's been doing it, not Jeremy. John Reed Stark was a bit overly pessimistic, and he only wanted to make it clear that he was open to hearing opposing viewpoints and that it was perfectly acceptable to share them with him. Despite John Rees Stark's incredibly pessimistic outlook on crypto and XRP, I've grown to appreciate his writing and find that I can still gain something from it, as long as I ignore his blatantly negative points. However, I am unable to follow him from my primary account due to the fact that the moment you engage in a response with John Rees Stark, without hesitation, he blocks Shep. I feel compelled to mention that Jeremy Hogan would never support cyberbullying, and I gotta say, Charles Gaspereau is absolutely right. His online persona betrays the melancholy, small man that he is. I still don't believe he would pursue Jeremy in that manner. Reports surfaced that the Hong Kong Virtual Asset Consortium had removed XRP from their worldwide index. What gives? Even though it is a top 5 index, XRP is no longer among them. With that, Alana has taken its place. That is the nature of these indexes, you know. Actually, that's just okay. Rupee should not be included in that index unless it is among the top 5. SEC is making a strong effort to obtain up-to-date financial statements that are not part of the litigation. The current business of Ripples is being threatened by their actions. Even though they arguably shouldn't have, the judge still grouped several of those odd transactions with the securities offering breaches, as is well known. What impact could this have on the present company of Ripples? So that's the main point? Can the SEC get their hands on those and use them to lobby for a change that will hurt existing companies? So, I brought up the idea that switching to chain operations, with an AM using a DAX, for Audible could be the best course of action. And yet, many argue that using exchanges was perfectly acceptable. I don't understand why using the DAX would make it any different for a deal. It goes without saying that this isn't a stock market firm. And hence, I am unable to explain Audible in detail. Though they use exchanges to send and settle things, the judge would have welcomed these transactions if there was some directness with the institutions where Ripple is providing XRP directly and receiving payments. In addition, if they go chain, our XRP will be mingled with their XRP in an AML, and the securities offering will go through. If a perfect consumer were to source liquidity from that location, they would be in the dark as to whether they are dealing with Ripple's XRP, my XRP, or your XRP. I believe that's the reasoning behind it. It's a better way for institutions to utilize XRP on Ripple. Users and buyers alike aren't able to verify the authenticity of the XRP they're purchasing on this secondary market. Since it was mentioned that such transactions would be fair and compliant if conducted on the secondary market rather than directly on the institution, it should prevent issues with securities offerings and similar matters. That's my take on it, or at least how I see it developing. I am deeply concerned about this. Since most NFTs are considered collectibles, under the current US regulatory condition, how much can they eat? These are not investments. Assuming you aren't committing to developing certain features once you receive payment, etc. Unfortunately, GameStop has announced their closure and is now listed on AT Marketplace due to regulatory concerns. The catch is that we can argue that NFTs are collectibles rather than securities, but the SEC's strategy on this matter is anyone's guess. So, until we establish clear guidelines, many individuals will simply choose out of getting involved. Because of such, it is detrimental to this area, in the absence of explicit guidelines. There may be real businesses out there that are interested in doing cool things using blockchain and crypto, but they've concluded it's not worth it. For the simple reason that you can't predict when Gary Gensler may crawl out from under the sewer and sue you. Here is the article you requested. Ripple is the name of it. The chief technology officer has stated that the big repurchase and ripples are due to a lack of liquidity. Nonetheless, I have already stated that I do not believe this to be the end of the world. However, this proves, in my opinion, that Ripples isn't yet prepared to conduct an initial public offering, IPO, or direct offering, go public. This is the rationale behind their stock buybacks. So, we began a Twitter back and forth about it. I had mentioned something along those lines, and David countered by saying, well, employees care that there is a path to liquidity for their stock options, RSUs, or whatever. He also indicated that going public isn't necessary. For a moment, I pondered this matter. Well, maybe a couple of them, but it doesn't seem to be technically right, I said. I then questioned why Ripple was the one purchasing the shares again if there was a so-called liquid market for them. Buying back shares is, once again, a poor use of their wealth. They are dealing with an immature business that isn't even close to being financially stable. Many companies are attempting to grow. With a market as liquid as this, why are they bothering? Later on, he clarified that illiquidity is a major problem for privately held companies and the equity market in general. That is the crux of my argument. They would like to raise capital by going public, either through an initial public offering, IPO, or a direct listing, but regulatory hurdles are making it difficult for them to do so at the moment. But I do believe that part of it is because their company isn't prepared yet. As far as their progress within OBL is concerned, they would rather not provide those assertions. Together with liquidity hubs, tokenization, and CBDCs, we have a bit extra effort is required to prepare that things. In my opinion, that is the message they have conveyed to investors, who are being told, listen, if you're ready to take a break, you've been in the game for a while, and your major investor will eventually cash out. With the money we have, you can do just that, and then more. Going public will be a longer process. Saying that being public or not is actually irrelevant is something I don't understand. Lastly, he mentions that nobody can actually profit from their stock if we're not publicly traded. And it is an issue when considering potential backers. Bringing on new staff is a challenge when it comes to stock options if I'm going to work somewhere seriously. Avoid illiquid stock options at all costs. I have a limit to how much internet shit I can throw at people. Isn't that a terrible market? To that end, an IPO is something that Ripple will inevitably pursue. That is not the moment. My sole argument rested on that. I am not a bullish news person. Nonetheless, I am optimistic that they will succeed. In 2024 or 2025, it could not even happen. The issue is more with Ripple as a company than with XRP investors. I mean, if their deal business was really taking off, I'd expect them to have a straight listing or an initial public offering, IPO, but at least it gives us a glimpse behind the scenes. We could skip the waiting altogether. That was the sole argument I made, and David seemed to agree with me. This article is essentially referencing that. In the comments, please share your thoughts. Again, I ask that you like and subscribe. Catch you later, farewell.